Now, in today's episode, we are joined by one of the most successful and well known natural resource and commodity investors of our time. That's Mr. Rick Rule. And today we're going to be discussing the landscape of the investing world today. We're going to be talking about monetary policy by the government, where this might lead, investments such as gold, silver, and mining stocks. Now, Rick has a really amazing online event, online symposium coming up. And I was just sorting through the roster and it looks like it's going to be spectacular. One of our sponsors is going to be there, and that's Keith Neumeyer from First Majestic. But Rick. Rick's one of the most well-known and successful and well-connected natural resource investors in the world. So he pulled together what looked like maybe 50 really top-notch natural resource investors and executives. And it's going to be absolutely fabulous. And the link to that is right there down below for you to sign up to that. I will 100% be on that. I believe it's on June 15th. My birthday is the 16th. So I'm saying this better be a good birthday present that, gets me excited, Rick. So for everyone right there down below, the link to the online symposium is coming up. It's pinned to the comments and in the description right there down below for everyone to sign up. Give a shout out to our channel sponsor, which is Vizsla Silver. So thank you for being our mining stock sponsor, Vizsla Silver. Make sure you hit the like button on this video or on that side to send this out into the YouTube universe. As always, comment down below, Rick Rule rules, right there down below, and say it 3 times fast as well. So good to see you, Rick.
Pleasure to be with you, Jake, and thank you for the tout of our conference. I promise I'll make it worth your while. In fact, if any of your listeners come to the conference and don't think it was worth their while, all they have to do is email me and I'll give them a full refund. The financial risk is all mine. Repeat, we've done this for 27 years. Money back guarantee. If you don't think that the conference was worth your money, I will cheerfully refund your subscription.
Now, is this online or physical? I mean, I know you've been running these in physical, but this one's online, correct?
Yes, this one and last year was online too. I was very concerned last year, as a 67-year-old might be with regards to technology, having run it for 26 years physically. And the truth is that the feedback that we got from the online symposium was at least as good as we got from the physical symposium. And in addition, people from 32 countries were able to attend online where they weren't able to physically.
Fantastic.
It's my hope next year that we will be able to give people the best of both worlds, which is to say, have a physical conference that's augmented by 100% online conference simultaneously, so that those people who are unable to come to Vancouver, British Columbia next year will still be able to avail themselves of the content that people who are there live will enjoy.
Awesome. So the link to that is right there in the description and pinned to the comments. Now, Rick, here's my first question. You're very calculated with the words that you say, and many people will call you like the economics professor of linguistics because you're very careful about the words you use now. And I know you don't like to go out too far on a limb, but if you were a betting man and you are purely just speculating on how you think things play out from a larger economic perspective. We've now had Warren Buffett talking about inflation. I watched the video of him and Charlie Munger, where he's breaking down that inflation is basically here to stay. And I think after the 5-minute clip, it ends with 3 words from Munger. And he says, "Now that was an intelligent man telling you it's dangerous. And it's only the start." And I want to ask you how you think this plays out. We've had Ray Dalio saying he thinks this might end in a dollar currency crisis. What's next?
Well, with the caveat, and I'm always caveated, that I'm not an economist. I'm a moneylender. I would concur with Buffett and Dalio. There are circumstances in the broad economy that are in fact deflationary. The level of debt that we hold is deflationary if we go into a credit default cycle. If a bunch of debt goes to money heaven, that's actually deflationary. That isn't what I think will happen. I think that we'll deal with deflation the same way we did in the decade of the 1970s, which is to say that we will try to debase the currency that the debt is denominated in and have an informal rather than a formal default. I believe too, Jake, that inflation has been with us for longer than we care to admit. When I see the consumer price index, a few things that I'm immediately struck by are that the people who compile the consumer price index don't shop where I shop. And I'm a cheapskate. I shop at Costco, but the idea that the basket of goods and services that allow me to live my life haven't increased by more than 1.5% over the last 10 years is not borne out by my cost of living. And I suspect they have not been borne out by you or your listeners' cost of living. The second thing is that the CPI is adjusted for, quote, hedonistic purposes, which is to say that if you buy a computer today for $2,000 as opposed to the computer that you bought 10 years ago, because the computer that you buy today is better, that the $2,000 is less today than it was then. Or if you rent a home today or buy a home that costs more than it cost before, that isn't inflationary simply because the home that you live in and enjoy has more features and is a better house. The fact is that substandard housing is not available, so you couldn't do apples to apples if you wanted to. But the idea that they could apply hedonistic adjustments to the rate of inflation is silly. Finally, Jake, the idea that my cost of living or the CPI index as reported doesn't include tax is absurd. 40% of GDP is taken up by government. And the idea that whether or not you want to consume government, that you don't, the idea that tax isn't included in the CPI is insane. So that's a long-winded way of saying that Dalio and Buffett and the rest of these people in this circumstances are much more likely right than wrong. I think that the CPI stated rate of inflation will go up. And I think that CPI is an understated measure of inflation. And I think that inflation has been with us for longer than we dare admit.
Now, some people have said, well, pretty soon here, the Fed's going to taper and there's been some echoes here and there, or they're going to raise interest rates or whatever they're going to do to stop this inflation. Based off of what you're saying, I am assuming that you think that for the time being, at least, is hogwash.
I think the Fed will let interest rates go as high as they can get away with, not because they want a free market in interest rates, but rather because they know in the future they'll have to cut them, and you can't cut them from zero. So from their point of view, the higher that they could let interest rates go by foregoing yield management, the longer they will do it. It wouldn't surprise me to see the US 10-year rate, which is the rate that I follow the most, go to 2 or a little above that. I think that would be a healthy circumstance. What leads me to believe that this won't be a long-term phenomenon is simply that the US 10-year is the rate against which all other rates are based. We've gone from 60 basis points in the 10-year now to 175 basis points in the 10-year. If the magnitude of increase in that interest rate, or even the quantum of that move in interest rates, moves through to other credit products, I think you will see an economic slowdown. As an example, if the 30-year mortgage rate were to triple, the same way the US 10-year Treasury rate has tripled, we would certainly find some affordable housing, but people don't like their housing to become affordable. Of more immediate concern, probably to the government, is if the US 10-year, the increase in the US 10-year Treasury rate begins to impact the rate paid and the marketability of the rollover of federal, state, and local debt in the next 18 months, which is to say, if that debt becomes unserviceable, or if it's offered at a low enough price that they hold a Treasury auction, nobody shows up, I think you'll see a circumstance where the Fed's hand will be forced to lower interest rates again. And if the Fed's hand is forced, if, first of all, they gave a Treasury auction and they had to buy the whole issuance themselves through quantitative easing, or if there's an economic slowdown engendered by higher interest rates and they have to back off, then I think the game with regards to gold and silver, at least, is on in earnest.
if they do an auction and no one shows up and they basically have to finance it all, that's like the ultimate figurative walk of shame. Then would it be?
Well, it certainly limits their tools. I remember back in the Clinton administration that Clinton said that the most powerful entity in the world were the bond buyers. That was before the Fed came to realize that there was enough confidence in society that they could hoodwink everyone with quantitative easing and artificially low interest rates. There was a point in time when the market still controlled the interest rate. That time is temporarily gone. We are in the age now of confidence in the economy and confidence in government. And the government would like to believe that it is bigger than markets. I don't suspect it is, but I might be wrong. It might be that we're in an era now where we can print with abandon. If that's the case, by the way, why don't they do away with tax? Why don't they fund the government just with counterfeit currency issuances? You get my sarcasm, I suspect. My belief is that the market will ultimately regain some measure of control in currency markets and interest rates. And my suspicion is that that won't be pretty.
Yeah, I mean, whereas this conversation, will money printing cause inflation? Maybe a few years ago you were a kook or a conspiracy theorist, but it's undeniable. And so it's either this keeps going and then a lot of people can't afford to basically live because what they make isn't going to be able to buy nearly as much. And you're already seeing that. And so that's going to be interesting to watch play out. I just find it interesting to hear, big people in the news now talking about inflation. How does this all affect gold though?
Well, traditionally, gold has moved as a consequence of people's nervousness about the value of the purchasing power of their savings. You have a circumstance now where the indicated level of inflation for 2021 is about 4.5%.
So what does that really mean? Does that mean it's really 12%? I mean,
I don't know, but just for fun, let's use their number. Let's use 4.5% because that'll make my point handily. If you lend the US government money in a 10-year treasury at 175 basis points in a currency that's depreciating by 450 basis points, it'll be the first time in your life, Jake, hell, the first time in my life, I'm 68 years of age, that the government has told you the truth. They will solemnly swear to give you back less money than you gave them. That's not particularly attractive. And that, I think, will continue to cause people to be concerned about the efficacy of their purchasing power denominated in US dollars, which will be good for gold. In my life, the level of real interest rates on savings has been, in US dollar terms, the most important determinant of the gold price. We could have a period like we had in the 1970s with relatively high interest rate, but higher stated rate of inflation, which is to say the real interest rate was negative, where you had a period of high interest rates and high gold prices because the compensation that was paid to you via the interest was insufficient to keep pace with the debasement of the currency. So the trifecta that we talked about in your interview before, Jake, quantitative easing, which is to say counterfeiting, debt and deficits, and negative real interest rates are all good for gold. And unfortunately for the country, and unfortunately for people of your generation, that ugly trifecta seems to me to be set in stone for a while.
Now, do you think that gold still has more lagging to do if you're saying you think interest rates could move up a little bit more before the Fed has to intervene?
Yeah, I could see that happening. The equities market is quite liquid now. Credit markets are quite liquid now. Confidence is very high. I could see the US 10-year rate go up to 200 basis points or 225 basis points. I'm not saying that it's going to, because life isn't about certainties, it's about probabilities. Right now, young people seem to regard, as do old people, these stimulus checks as manna from heaven. They don't understand, as an example, that free money is very expensive. It has to be paid for. And we have a whole circumstance through the economy where we've lived through pretty good times in the period 1982 until today. And our expectation is more good times. Our expectation, I don't mean yours and mine, or maybe even many of your listeners, but the expectation on the part of many Americans, investors, is that the Fed has their back and that their government is there to serve and protect them. I happen to disagree with those two suppositions.
Okay, so if you're saying life's not about certainty, it's about probabilities. How would you rate the probability of the prospects of still investing in gold, silver, commodities? Are we in the early stages of this still, or what have you?
I suspect with regards to the gold equities, we are, a horrible baseball parlance, we're probably in the fourth inning of an 11-inning game, meaning the two prior gold bull markets that I lived in were both 11-year affairs. The first starting in 1970 and going to 1981, the second being 2000 going to 2011. There's no law written in stone that says these things have to be 11 years. I'm just pulling it out of air because that was my experience. And I suspect that we've been in this market for 4 years.
So when do you suspect this market began?
My own estimation would have been 2018, 2017.
Got it.
I remember very well, sort of 1,050 gold. I remember very well the gold stock index looking like the electrocardiogram of a corpse for a substantial period of time. And I think that the uptick probably began late 2017, early 2018. These things are fairly imprecise. Could this malaise in gold and silver prices and precious metals equities continue for 3 months or 4 months? Absolutely. We've talked before in your show, Jake, about the fact that if you study the chart of gold, various composite gold equities indexes going back 50 years, what you will see is that cyclical declines in secular bull markets are frequent and common, and frankly dramatic. And the circumstance that we've been through in the last 9 months is certainly common through the history of prior bear markets. So it wouldn't surprise me to see it continue and perhaps deepen. I'm not saying it's going to, but my suspicion is that if you approach the future with with caution, you're likely to have pleasant rather than unpleasant surprises.
Now, if you were my age, I know I know your story quite well. And when you were around my age, you caught the commodities market at the right time. How would you weigh back then to right now? I know the lens that perhaps you look at now is different because, as to use your own words, I'm not insulting you, that you're rich, fat, and old.
You forgot bald.
Yeah, forgot bald. Yeah, so you're rich, fat, old, and bald. So I know the lens that you look at is a little different. But if you were looking at it from an aggressive vantage point, back when you were starting to make your mark, but you look at the present environment with the underinvestment in so many commodities, the currency devaluation, the inflation, the supply chain mess ups from lockdowns, how would you weigh right now, not just gold, but count gold, count silver, count uranium, count copper, count just natural resources and commodities versus then?
The decade of the 70s was unheralded, and I won't experience anything like it, nor will you in your lifetime. Remember, first of all, that the price of gold was price controlled, meaning that it hadn't been allowed to move by fiat from the Roosevelt times to forward. Secondly, society had underinvested in natural resources and extractive industries since before the Depression, which is to say that substantial investments in supply capacity hadn't taken place for 40 years, despite things that destroyed supplies like World War II, which used up a lot of stuff. And we had an economic boom in the 1950s and 1960s, not just in the United States, but around the world. So we increased demand rapidly, but we didn't increase supply. And with specific regards to precious metals, we kept a lid on prices by fiat So that set of circumstances was unique and won't be repeated. That notwithstanding, my suspicion is that the next 4, 5, 6, 7 years will be very generous. Remember, Jake, that in the 1970s, as an example, the gold price went from $35 an ounce to $850 an ounce.
Yeah.
The silver price went from $1.50 to $50. The natural gas price went from 15 cents to $15. You can have a market that is somewhat less generous, but one that can still change your life. And that's my suspicion as to what will occur for judicious speculators going forward.
One of the things that I often wonder about, obviously, it's not an investment strategy, but one of the things that I wonder about, especially being in commodities where there's a lot of volatility and therefore speculation, I wonder how the internet and the fact that everyone's chasing a yield, and they'll buy, Barkey coin and send Barkey coin to $1 zillion. So I wonder what type of impact that could have on commodities, not just gold and silver. You're talking uranium, you're talking all with Twitter, with all of these things, what that could do to the valuations of commodities that maybe, is even hard to comprehend.
Well, I would argue, first of all, that you've misused the word yield. To me, yield is a dividend or an interest coupon receivable from earnings. And I don't think that Barkey coin, if it exists, generates surplus earnings. I think what you're talking about is the fact that with the internet, and with the yield, the real yield involved in conventional instruments being so low, that people have chased narrative. They've chased capital gain as a substitute for common sense. That happens as long as confidence is intact. If we have an event like 2008, which I think that we might, that'll take care of confidence for a while. And Barkey coin will go to speculative heaven like so many speculations before. We have a circumstance now where the cost of capital is artificially low and the availability of capital is artificially high, at the same time that we're coming off a 40-year bull market in equities and bonds, which is to say that confidence is nigh, stupidity is rife, and even stupid people have access to money. This is a dangerous combination. Two, the methods by which we distribute information and acquire information are very different. And by the way, I think better. When I was a young man, information was distributed to us. It was given to us, if that's the right phrase, by government, by the academy, which is to say by institutions of higher learning, a misnomer, and by the big press, Newsweek and Business Week and NBC and CBS and stuff like that. The internet has changed all that. First of all, information is less important than it used to be because we have access to information, however censored, from Wikipedia and Google and all those things. You don't have to know as much. You just have to know how to know. And opinion comes to us from 100,000 sources, yourself included. And that's all good. But it takes time for society to digest all this freedom and figure out how to separate the wheat from the chaff. One consequence of that is that narrative, which is to say story, can inflame speculative passions when knowledge is low, but aggression is high. And so we have to get through that period now. This will happen. This will all happen. The young people who are making so many mistakes as we speak, investing through Robinhood in narrative, will get spanked the same way I got spanked. The fact that they're in the market now, learning lessons with their own money, the fact that they are learning to absorb information through technology from many sources, the fact that they're searching for paradigm, searching for thought leaders searching for branded conclusions from 10,000 sources or 100,000 sources rather than 4 or 5 sources is all good. It's just very, very, very messy.
Okay, for future interviews, instead of using the word yield in that situation, we'll use the term cash money dog instead of
Work,
yield on that
works
one.
for me. Works
Okay,
for me.
cool. All right. So then if you're looking at this entire landscape right now and you were saying, how do I get rich? And I want to define rich to not be, have 4 cars and have 11,
Mm-hmm.
spaces as having legitimate freedom. And
Mm-hmm.
in an inflationary world with how expensive it is, and we know it's a lot more than we think. And let's say, even if you didn't have an exact number, but you had this idea of, I want FU money.
Mm-hmm.
How would you go about doing that?
Easy. Uh, well, easy. Um, Achievable. The first is invest in yourself. Invest in your education. Invest in your own business if you have a business. Invest in your ability to service a market better than other people. Do something that you know adds utility to your customer and figure out a way to do that better. You don't have to have your own business. You can do that within somebody else's business. I did it for 10 years at Sprott, very, very, very happily, having done it on my own. But invest in yourself first. The second thing is don't follow the herd. Uh, it's important that you choose areas that are out of favor and hence cheap. Don't strive to get rich in 3 months. Strive to get rich in 10 years because that's how long it takes. Don't be confused with the silent siren song about something that's going to give you a tenfold return in 3 months, because more often than not, it doesn't exist. With specific regards to your investments, and I know this sounds counterintuitive, but I've said so before, maintain large cash balances. It is true that cash savings result in diminished purchasing power over time. But in a circumstance where it's likely that a black swan event comes and disrupts things, changes the market as we know it, having cash during a period of illiquidity will give you certainly the tools, but hopefully the courage to take advantage of that volatility rather than being taken advantage of, and have some of that liquidity in precious metals. Gold is, to be sure, volatile cash, but I suspect it's good cash too.
Okay. So, all right, let's say that I don't, and I'm just poking at you, but let's say I'm not old, bald, fat,
Mm-hmm.
and rich
Yeah.
yet.
Oh,
Maybe
I
I'm
was.
starting to get rich, but let's
Mm-hmm.
say that, I'm in my 20s, I'm in my 30s, or I'm excited about the prospects with my investments. But then you look at the larger landscape that, maybe it's less relevant to you because you don't have 70 more years here, right? And when I look at it as a 29-year-old and I hear, um, all this rhetoric about taxes, on a level where it's no longer a tax, it becomes a confiscation. And the move, historically speaking, we're speaking in probabilities. Historically speaking, what happens when these places, when governments extend themselves, they become parasites, they kill the currency. What happens is you actually move towards more of these socialist leaders and the people problem reaction solution. They get excited about them. And so, this becomes a situation where people lose freedoms and people also lose their money, their wealth, their businesses. This has happened many times throughout history. How would you play on the offense or defense for this seemingly more invasive species of government parasites that seems to be birthing now through a longer period? I mean, we've got AOC and Bernie and these types of people saying, we should have 75% taxes. Um, how do you play the offense for that? Do you diversify internationally? Do you get a second passport? Do you start to move wealth outside of the United States? Is there certain important things you need to keep in mind? How do you think about the long-term horizon of this seemingly more parasitic um, system that is birthed often during crises and people asking for help?
Well, that's a very large question. And I think it depends on who it is I'm addressing. When you talk about 27, 28, 29, 30-year-olds, there's tens of millions of you, and there's no one size fits all answer. My belief is that if you're fairly flexible as a person within your family, that Doug Casey's advice, which is to have your assets, your ass, and your passport represented in three different destinations. um, you would be a resident of a place where theoretically they didn't control your passport. You would have your passport in some place where neither you nor your money resided. Many young people don't have enough assets to affect that, which is to say they don't have sufficient assets to have a living, have a second passport, and have investments that are similarly protected. So you have to take all of this advice in your own circumstance. Certainly, to the extent that you have some assets to shelter, getting those assets legally, the government is much smarter than you think they are, legally out of the domicile that you reside in is an intelligent thing to do. Offshore your money before you look to offshore yourself. Were I your age, in retrospect, the right thing for me to have done would have been to export my carcass and my passport to some other jurisdiction. There are people for whom family or societal circumstances make that impossible. I understand that. I respect that. The truth is that culturally, despite the shortcomings of the United States, when I travel around the world, I regard myself culturally still as American. I understand that the United States is an increasingly less hospitable place for Americans, or at least Americans that exhibit the values that I think define an American. But that's editorializing. I still believe that more important than the big picture is the small picture, which is to say what you do, how you prepare yourself, how you school yourself to add value. Those taxes that Ms. Sanders, pardon me, Mr. Sanders and Ms. AOC
You're allowed to use those pronouns interchangeably anyways.
Yeah. Oh, I wouldn't dare do that. You have the odd politically correct viewer still. I offend without trying normally. But at any rate, that presupposes that you have been financially successful. So take the first step first, which is to say, create the circumstance that you need to defend yourself from. So many people, Jake, in my lifetime have used fear of the big picture and fear of the government as an excuse not to succeed. I remember people saying to me, what's the point? If I get ahead, Bush will take it, or Carter will take it, or Clinton will take it, or something like that. Don't use fear of the big picture to constrain your ability to deal with what is under your control, which is to say, how do you make yourself a more proficient provider of utility in whatever form it is to the market? Beyond that, by all means, take steps. The steps that you have suggested are all reasonable, but people need to take that advice in their own circumstance. If rather than being Jake Ducey, alternative media glamour boy, you were a postal worker, and you saw the same set of circumstances as a postal worker that you see. Your ability to take advantage of it would be very different. The fact that you need to take advantage of it would remain the same, but the steps that you might be willing and able to take would be different. So the first step, I think, is awareness. Understand that the next 10 or 15 years is likely to be substantially less generous, pardon me, than the last 10 or 15 years was. And so the circumstance that's in front of you will be different than the circumstance that's before you. One thing I can say to people who have been, like yourself, relatively successful at a reasonably young age, a bear market would be a very good thing for you, Jake. It would be very unpleasant to go through, but it would be a very good thing for you. Doug Casey once codified this for me by saying, in a bear market, wealth doesn't get destroyed. It just changes hands. It goes to its rightful owner. That's ugly for the people who lose it, but it's not so bad for the people who acquire it. Let's say that in a bear market, a $2 million home becomes a $600,000 home. From the bank's point of view, that's lousy. From the seller's point of view, that's lousy. From the buyer's point of view, not so bad. Let's say that the S&P 500 declines 60% in price, something I've seen before in my lifetime. If you believe, like I do, that companies, like Johnson & Johnson, like Merck, those great American franchises are attractive businesses selling at unattractive prices, if they came to sell at attractive prices, for those who can afford them, that's a good thing, not a bad thing. So if I were you, Jake, I would regard the prospect of an upcoming liquidity squeeze, provided that you maintained liquidity and developed the courage to use that liquidity, as a good thing, as a life-changing event. The money that I made, as an example, in the last uranium bull market, I only recognized in the bull market. I made it in the bear market. Remember that to buy low and sell high, you first have to buy low. And bear markets are that circumstance where you can buy low in anticipation of selling high. You can't buy low in a bull market.
In order to buy low and sell high, you first have to buy low. You're full of a lot.
It's pretty simple, but if you think about it, it's just true.
You're full of these 5 words, very simple sentences that are very deep, that could keep you thinking about all day. And one of the ones I wrote down is, you said, create the problem that you need to defend for. I thought that was pretty interesting.
Yeah, recognize it. Recognize it. There's a whole set of circumstances out there to be afraid of. Think about what's most likely and think about what it is that you can correct. The ones that you have no control over, don't worry about too much, because it'll distract you from paying attention to the ones that you can control.
Yeah. Okay. So here's the interesting thing. One of the things that you talked about a moment ago is, you said how many people you met that basically they say, or they believe, they can't get rich because of the government, or because of the Rockefellers, or because of the Federal Reserve, or whatever. And I've noticed that in the people that more understand the macroeconomic landscape, or the totalitarian of the government, they seem to grasp it. But it is interesting. For me, it created a sense of urgency that actually helped me financially. But I've seen many people fall into the other category you suggested. Why do you think that is?
It's easier to blame somebody else for your shortcomings. If you didn't identify a circumstance where you could create value, or if you consumed beyond your means, it's easier to say that the government did it than to say, I screwed up. When I talk to young people now about getting rich, many of the ones that I talk to don't actually want to get rich. They want to live rich. They want a Lamborghini or something like that. I never wanted a Lamborghini. I wanted to own a Lamborghini dealership. Telling people that the way to become a capitalist is to build some capital, which involves savings. You don't get a Starbucks. You don't get a designer beer. Maybe you don't get a car until you've set aside at least 10% of your paycheck pre-cash. You can't become rich merely on your own efforts. Your capital has to help you become rich. And if you don't have capital, you can't be a capitalist. If you worry about the things that you can control more than you worry about the things that you can't control, what you find is that your ability to control more things that you formerly couldn't control increases. You follow where I'm going with this?
Yeah.
Now, I look at some assets that I bought 30 years ago, and I bought them for the right reasons. I just didn't understand how good things would become. I made mistakes on the wrong side, which is to say, I was too pessimistic. I misfigured. But the truth is that served me very well. I wouldn't have been able to make that mistakes had I not had both the capital and the courage to underestimate the power of compounding, which has worked in my favor, certainly.
One thing that I've noticed, I don't know how many, we've talked for a lot of hours between our interviews and off air. And one of the things that I noticed talking to you is that you very comfortably speak about getting rich, and you very comfortably speak about money. And, having numerous service-based businesses on the internet and talking to a lot of people and just people in everyday life, I noticed most people are very uncomfortable with money in general. Can you talk a little bit about that?
That noted capitalist, Deng Xiaoping, the premier of China, once said, "To be rich is glorious." Now, that isn't the only path to glory, but think about the function by which you become rich, Jake. What money is an expression of utility. It's a medium of exchange. If I have an apple and you want an apple, and you pay me $1 for the apple, it's because you want the apple more than you want the dollar. If I have a bushel full of apples, I want the dollar more than I want the apple. And we both go home happy. It's a win-win exchange. Wealth, at least material wealth, and there's various forms of wealth. Wealth is simply a function of producing more utility for society than you consume from society. The fact that you have become wealthy, if you didn't do it through theft, through government or some mechanism like that, is proof of the fact that you have been altruistic. You have generated more utility than you have consumed. For me, material wealth was important, not because I wanted to spend it. I still don't like spending it, despite the nice house that you can see in the background. It was partly because I enjoyed the process, and partly because when I was a very young person, I existed in financial insecurity. And I didn't want the stress involved that my family experienced not having money. But I would say that I'm comfortable now about talking about wealth because I believe that wealth that's been generated through your own efforts is an expression of the fact that you have contributed more to society, that they have consumed from you voluntarily than you have consumed from society. I suspect that if government were a good thing, that taxes wouldn't have to be enforced via extortion and the threat of violence. When government wants something from you, they can compel. When Jake Ducey wants to make money, he has to convince. He has to provide a service or a good that people buy voluntarily. And the fact that more people buy stuff from Jake for more money than he has to consume, either in providing the service or living his life, what that means, pro forma, is that you have contributed more to society than you've consumed from it. And therefore, the process of your becoming wealthy is very honorable.
That's really powerful. And, me, I've been in the personal development industry for the last 10 years. And it's one of the things I've really watched is people's philosophies or mindsets or beliefs about money or about themselves and how much that shapes their outer reality. And you speak it's very moralistic and philosophical in that you said, making money, so long as you didn't do it by robbing someone or being in government, it is proof of altruism. And I personally believe that. And I think that I found that it's really aided me in my success because it's had a different mind shift in how I viewed money. How much do you think your perception of money and yourself and having a clear definition of it, as you so obviously do, how much do you think that's affected your success in life? I mean, obviously you're incredibly successful and you've met a lot of people that, maybe they were relatively as bright as you in the investing community, but maybe they lost it or they never quite made it. How much do you think that type of mindset has affected your success?
I think it's been instrumental. I understood that part of wealth from a very early age. I understood that the free interchange of goods and services was a good thing, and that people became rich providing services more effectively and efficiently than their competitors. I understood too that savings was good. I understood that for me, material possessions were often a hinder. I've lived most of my life wanting to be an irresponsible adolescent. And a lot of material possessions, things like fancy cars and stuff that you had to maintain, generated more aggravation for me than they did utility. But the turnaround, and we've talked about this in interviews before, for me occurred at age 30. When my then new wife said to me, don't worry about getting rich. Worry about doing something well that serves others. And I suspect the money will take care of itself. And literally, as soon as I stopped trying to figure out how I was going to make money at something, and how I figured out how I could deliver services to clients more efficiently than other people, immediately I was happier, more fulfilled, but immediately my income increased. And when I say immediately, I mean within 90 days. When I stopped worrying about making money, I started making lots of money because I understood, listen, don't get me wrong. You have to figure out a way to employ your skills in a way that's needed. And you have to find a way to find customers and to explain to them the value of your goods and services. I'm not trying to say that the process doesn't involve a consideration of money, but money shouldn't be the primary consideration. The primary consideration should be adding utility efficiently compared to your competitors.
And I find that really interesting because I'm really into consciousness and how consciousness affects reality. Mm-hmm. And it's interesting because when you desperately wanted the money, I call that like being in a needy energy. You can't really even see that clearly. Maybe even on your sales meetings with prospective clients, there's like a subconscious translation of that need. But then you shifted and you immediately thought of how to serve and how to build utility. And then you have this big floodgate open. And I call that like the abundance versus like the need mindset. And I'm curious why you think so few people understand how to earn more money and what it takes for someone to start to make that shift. Because they might hear you say, well, it's easy for you to say, but you're Rick Rule, so you provide utility. Yeah, but you're Rick Rule and you're famous. So how does someone that's used to typing, negative comments on YouTube or getting mad about how the Rothschilds are going to enslave them, how do they shift to focusing on the things, as you say, they can control?
Let's start by saying, Jake, that most people never will. Unfortunately, inputs and outputs are not distributed equally or ubiquitously through society. That's just the sad truth. But my suspicion is that people with a curious mind won't adapt the lesson that you and I attempt to teach today. But for some of them, it'll jog something in them. And some series of events will take place that it will jog their self-perception and their actions 12 months from now or 18 months from now. You used a very important word, which is consciousness. Most people, I think, believe that life happens to them. And at one level, that's true. But you have the ability, and I would argue the obligation, to influence what does happen to you in your life. Consciousness, which I think is, I think that curiosity is a subset of consciousness, but I think that consciousness and curiosity is really the determinant of at least financial success. The idea that there are all kinds of circumstances out there that you have to consider, but what you can control is the way you think and the way you act, is critical. I'm not sure that most people want to control the way they think and the way they act. I think that maybe most people want to believe that either Trump is their savior or Biden is their savior, or Christ was their savior or something like that. All of those may be true to some small degree, but it's only you that know what you want, what you need, what you're good at, and how you can help others. So this very word that you use, Jake, consciousness, is really the determinant. I can't tell somebody how to get ahead because I don't know what getting ahead means to them. I don't know what they want. I don't know what sacrifices that they're willing to spend to get ahead. I know for myself, interestingly, that I have learned somewhat later in life that although I became to a complete degree free of financial concern, and I also became free in a commercial sense of other people being able to order me around after I got rid of a regulated environment, I still found myself to be trapped in my own ambition. As an example, there are certain things I want to do in retirement that I haven't managed to find time to do because I'm too busy working while I'm retired to do them. So I think perhaps you never get free. I don't know if you ever read the old Harry Brown book, but I would urge your young readers to read that. It's called How I Found Freedom in an Unfree World.
I have read that.
A wonderful, wonderful, wonderful book. And it talks about freeing yourself from societal constraints, freeing yourself from the misapplication of history, but importantly, freeing yourself because, as you would suggest, becoming conscious and getting control of your own mind and action.
Powerful. This is definitely the most fun conversation that we've had. A lot of conversations. I think this one's my favorite so far. If you're enjoying this video so far, make sure you hit the like button on either side. Comment down below Rick Rule Rules. If you haven't yet, click that link in the description or in the comments to sign up for Rick's online investment symposium coming up here soon. I want to ask you this, Rick. Did you ever think you'd become as successful as you are?
I thought that ultimately I would become materially successful. I tested that faith a couple times, but
you're not materially successful. I mean, I know you're a modest guy, but like you're incredibly successful. Did you ever think you'd become that successful?
I didn't think that I would become as influential or enjoy the same reputation with as many people as I enjoy. And that's been a great delight to me. The idea that because I've been successful financially, people have sought out my opinion. I've established credibility in one aspect of life, which has allowed me to talk about other things with some credibility. And that isn't anything that I had ever anticipated. I had never anticipated, as an example, that I would be able to go on Zoom and mentor young African students in finance and have them care about what Rick Rule had to say. That's been enormously pleasant to me, being ready, willing, and able to teach and have somebody willing to learn has been a real joy.
So what do you think was the distinction? There was a lot of investors, speculators, brokers, firms that have focused on, whether it's commodities or not. I mean, heck, there's been an incredible bull market in everything, but you've you've reached the top couple percent. What do you
I
think
focused.
you focused?
I focused. Yeah. I mean, there's a wide variety of opportunity out there in financial circles. But most people who go into finance, be they stockbrokers or investment bankers or investment managers, uh, bite off more of the apple than they can chew. It's impossible to outcompete your peers if you're not better at something than they are. So the person who tries to understand supermarkets and frontier market bonds and technology and financial services ends up not knowing very much about any of them. By contrast, the old, fat, bald, rich white guy who does one thing for 45 years either gets skinny, which I didn't, or outcompetes their peers. There was a point in time in my youth where I thought that the success that I had enjoyed in natural resources meant that I was good at business generally, and that I could do motion picture finance, which I did, real estate finance, which I did, generalist investing, which I did, and do them all well, which I didn't. And the consequence of getting fairly severely spanked at the beginning of the decade of the 1980s, and thereby retreating into my circle of competence, retreating into a circumstance where I knew at least as much and probably more than my competitors, combined with not focusing on making money, but rather focusing on delivering utility, is really responsible for the fact that I've managed to outcompete people who were almost certainly smarter than I. I'm not sure that for at least 25 years of my career that any of them worked harder than I did, or worked with the same focus that I did. But I think that a lot of people unilaterally disarmed in a war of ideas because they didn't choose to focus on areas where they had a durable and definable competitive advantage, or they didn't bother to develop a durable and definable competitive advantage. There's very few people in the world, as an example, who understand more about exploration economics than me. It's not a field that needs very many experts. But if somebody chooses to come compete with me in my sandbox, they better be good. They're fighting a guy who can shape perception because of his reputation, and also somebody who over 45 years has understood an awful lot of the elements that go into making a business decision. If somebody parachutes into my space, having just recently quit selling cars, it is unlikely that they're going to compete with me in a fair fight.
So when you got into motion picture finance, I'm guessing the reason that failed, you investing in movies, is because you cast yourself as star A and Doug Casey as star B, and it probably didn't work out that well, right?
No, I was smart enough not to get involved in the technical decisions around film. I just decided that all aspects of finance were the same. And I didn't understand a good practitioner from a bad practitioner. It's ironic that I did that because I never liked movies. Most people that get into it because they're interested in the product. I got interested in it because I was interested in the tax model. And further, unfortunately for me, my first 7 efforts were successful, which occurred by accident. I didn't learn just how little I knew until the middle part of that adventure, where I learned very definitely how little I knew about that business.
All right. So we'll wrap it up here. It's been a really fun conversation. I want to ask you one final question for everyone listening. If you enjoyed today's episode, be sure to give us a comment down below right now to help out the YouTube algorithm. Hit the like button on either side. Rick's Symposium is in the description and pinned to the comments right there down below. Rick always giving us a lot of great wisdom, teaching, information. It's always for free on YouTube. So return the favor right now and sign up to the online event coming up here pretty soon in the description and pinned to the comments. So my last question is, you've talked a lot about focus. We live in a world where it's very hard to focus uh, for many of us, and where our brains probably have gotten materially dumber on our ability to focus from phones and 9 million tabs open, and one person saying this thing and one person saying this thing, and then living in an emotional world with a lot of anger that can cloud our ability to focus, and it can capture our emotions. Why are you such a good focuser, and how do you focus?
Well, I learned the financial penalty of not being focused early in my career.
Hmm.
It just made intuitive common sense to me uh, that I couldn't be all things to all people. You need to look at places that you have a definable competitive advantage. You could be a hell of a basketball player and be a pygmy, and it's not going to work out too well, you know? And so you have to find areas that you enjoy enough that you'll get to work early, stay late, and work hard in the interim. And that has to be combined with identifying an area that you like where there's a market need. I guess I learned that early on. 30, now that I'm 68, feels like early on. And I suspect that people who are, to use your term, conscious, can do that. There's a whole bunch of stuff that goes on in the world that may be interesting in the abstract, but it's not relevant to you. Certainly not relevant in terms of figuring out how to deliver utility. But I suspect that your smarter listeners and readers, if they have a discussion with themselves and examine their own consciousness, will come to understand that facet of human experience that they are interested in, good at, and is needed. Unfortunately, most of mankind won't. That is the reason that success is so unevenly distributed.
Powerful. This is a really fun conversation. I want to thank you. I know you're busy. We went a little bit over our normal time, and so for everyone listening, give us that like, give us that comment down below, subscribe and bell notification to get notified for new videos. The symposium link is right there down below. Rick, any final thoughts?
Yes, absolutely. Too. Congratulations on your success, Jake. I've been watching your channels grow, and it's just absolutely spectacular to watch. No excuses from you. You just get ahead. The second is I'd like to invite, as I always do, your listeners and subscribers to submit their natural resource portfolios to me in the quest for financial success. You can do that at a website, sprottusa.com/rankings. Enter your natural resource stocks. Please no pot stocks. Please no tech stocks. I'll rank them 1 to 10, 1 being best, 10 being worst. And I'll comment on individual issues where I think my comments might have value. As a postscript, please be patient. It's annual report time. And so I'm hellishly busy in retirement. So if you don't get a response for 5 days or 6 days, it's not that I've forgotten you. It's just that I'm trying to do too many things at once.
So we'll put the link to sprottusa.com/rankings, link to the symposium. Comment down below, Rick Rule Rules. Let us know if you enjoyed today's episode. If there's anything I missed that you want to ask Rick on a future episode, give us that in the comments right there down below. And we want to thank you for being a regular listener to our show.